Welcome to the Economy Magazine. I'm Binyamin. Tjong-Alvares with the top report on today's show. A weak currency and higher prices continue to squeeze Brazilians. And Britain's middle-class moms central to upcoming elections. First, the headlines. Asian stock markets rose on Monday, with China shares nearing a 7-year peak on hopes for more infrastructure spending and policy stimulus. Shanghai shares closed up 2.6%, testing highs last seen in May 2008. The Hang Seng China Enterprises Index was up 1.5%, and Japan's Nikkei firmed 0.7%. Asian markets also gained support from comments by U.S. Federal Reserve Chair Janet Yellen, indicating a gradual and data-dependent pace of tightening. Oil prices fell on Monday as traders speculated on whether Iran and 6 world powers would reach a deal that could further increase the global glut. Brent crude futures were down 42 cents at $56 per barrel as the markets began to price in a potential agreement with Iran. U.S. West Texas Intermediate was down 84 cents at $48 a barrel. If sanctions against Tehran are lifted, more fuel would flow to an already oversupplied market. And in the second quarter, the U.S. buildup in stocks may further weigh on prices for lack of sufficient global demand. As Greece and its creditors rush to secure its future solvency, market metrics show Greece is in danger of sinking under the burden of its debt. Greece has not given up on its aim to renegotiate hundreds of billions of euros in debt to render it manageable. Eurozone officials, however, say Greek proposals for a revised bailout program lack detail to satisfy the government's international creditors. Creditors demand Athens implement reforms before unlocking about 7.2 billion euros in undisbursed bailout funds. And without fresh funding, Athens risks running out of cash before meeting a 450 million euro loan payment due to the IMF next week. Billionaire financier George Soros is ready to invest $1 billion in Ukraine if Western countries help private investment there. Soros said in an interview published on Monday, the West can help Ukraine by increasing attractiveness for investors. He noted that a political risk insurance is necessary, suggesting mezzanine financing at EU interest rates close to zero. Soros, who previously recommended a $50 billion financing package as a bulwark against Russia, also touted concrete investment ideas in agriculture and infrastructure projects. The US dollar's appreciation globally has had an inflationary effect on Brazilian prices, lowering local consumption. And given the government's introduction of price hikes for transport and electricity, working class incomes have been greatly limited. More in this report by i24 News reporter Daniel Roth.
In Rio de Janeiro, a dream can now be a reality. A luxury apartment with stunning views of Copacabana can be bought, and cheaply. Over 5 months, property prices have fallen by half, a situation that illustrates the difficulties the country is going through. Since the beginning of the year, the local currency has lost 20% of its value against the dollar. The fall began in late 2013 amid the U.S. Fed decision to suspend quantitative easing, which sent a shockwave through emerging markets. It continues in Brazil with lower commodity prices and capital flight. Over 3 months, investment fell 4.4%.
What was down the most in 2014 was investment, and family consumption also grew a lot slower because of these factors. Interest rates were also up, so that all influenced family consumption to grow less in 2014 compared to previous years, having an effect on the GDP.
Brazil's growth in 2014 was positive 0.1%, but 2015 may have recession in store. Bad news for the state budget with a current deficit that has deteriorated sharply in recent months, reaching 4.2% of GDP. The fight against tax evasion is one of the priorities of the government in order to fill the coffers of the country again. $5.5 billion were misappropriated.
Some advisors were corrupted by particular people. They effectively sold benefits to certain groups of taxpayers. We're talking about large tax-paying organizations, significant amounts of money, and cases worth huge amounts.
While a specific Petrobras case is at the center of headlines, these new economic revelations continue to undermine the political and economic environment. 70 financial entrepreneurs and companies are now suspected of tax embezzlement in Brazil.
And for more on the US dollar and what lies ahead in the markets, we are joined now by financial expert and founder of JK on FC, Joel Kruger. Mr. Kruger.
Hi, Binyamin. Nice to be here.
Thanks for joining us. So what is the story with the US dollar? What should we expect from the dollar and why is it so strong?
Well, I think that, it all comes down to interest rates and interest rate differentials. So if we go back to 2008, the crisis originated in the United States. And when you get a crisis, central banks need to react. And so one of the ways that they react is they lower interest rates. Now, why would I hold my money at a lower rate if I can hold it at a higher rate? So when the Federal Reserve started to cut rates, the dollar sold off dramatically. Now we're at a point in the cycle where the United States was the first in, and they're going to be the first out of crisis. And so the Fed is starting to move towards raising interest rates. And the market has been pricing that in, and as they priced it in, the dollar's had a massive recovery across the board.
Of course, and basically everybody wants to put their money in dollars, which are now presumably going to be even more appreciated.
That's correct.
Okay. Now, what else are we looking at in terms of U.S. data? Because Janet Yellen made very clear that it's going to be a paced sort of decision, so to speak. It's going to be very gradual. They're not going to just go up and hike those interest rates. What are we looking at?
So the big challenge in the market right now to speculate in the market and to see and try to figure out direction is to actually try to parse the Fed and understand what the Fed's doing. So when you look at the last interest rate decision, everybody was expecting the Fed to remove their patient language, which would signal that they would be moving to higher rates.
Right.
But they did that, and at the same time, they actually came out more dovish by offsetting that, and more than offsetting that, by lowering their forecasts, lowering their inflation forecasts, and then lowering their interest rate hike forecasts. So it comes down to parsing. Now, when we look at data ahead this week, it's going to be the monthly employment report. So we're looking at the non-farm payroll release coming out on Friday.
Okay, and how's this going to affect the equity market?
So as far as the equity market's concerned, what's happened over the past several years is that the equity market and investors in equity markets have been hoping for bad data. And the reason why they've been hoping for bad data is because the bad data just solidifies the fact that the central bank is going to keep rates low, which is great because that's an incentive to take this free money and put it into risk assets and into equities. So if we see the data come out as expected or better, if we see 250,000, if we see the unemployment rate at 5.5%, and we see a rise in wage growth, then the market might see the dollar go up and the equity market actually might sell off.
And in terms of other events happening around the world that might have an effect on the dollar, maybe through the oil market, or what do you see happening?
So I see right now a world that's very focused on the Iran nuclear talks.
Yeah.
And what's happening over the last week is something that we might be seeing a little bit of the world neglecting what's going on in Yemen right now. You have the Hadi government facing off against the Houthi. You have the Saudi Arabians facing off against Iran.
Right.
You have the Sunnis against the Shiites, and then you have even bigger picture where the West is clearly against the East. You have the West lining up against Russia, China, and Iran, who are on the other side. And so this is potentially a Yemeni spark that we're seeing, where that could effectively impact the oil markets if the Houthi take over right now and they gain control of the Hadi government, and that could really affect the price of oil higher.
Okay, just quickly, and is Greece a wild card in this?
So Greece is another big story. That's an ongoing saga that we're seeing in Greece. And this is right now over the weekend, Greece has just submitted its latest list of reforms to its creditors. And it's a bit of a back and forth right now. The creditors want to see Greece implement hard reforms, austerity type reforms, whereas Greece, on the other hand, has been implementing sort of softer, non-austerity measures. And so if the creditors accept the reforms, then we're going to see Greece stay, hopefully, within the EU.
Okay, well, Joel Kruger, thank you very much for joining us.
Good to be here.
Fantastic. Then we move on now to our next story, which is a little different. With only about 6 weeks left to the UK elections, the target voter this time around is Aldi Mom, a middle-class mother whose wage hasn't risen in line with inflation. Here's the story.
Laura and Phil are doing their weekly shop. Despite both having good jobs, they've swapped to a budget supermarket to combat rising costs. Prices have gone up in the UK by over 11% in the 5 years since the last election, but salaries haven't kept pace.
I mean, I work for the NHS, so obviously the pay increases aren't a lot at the moment, obviously because of pressure on the government, so it's only been like 1 or 2% rise every year.
Yeah, my job, I work in printing and only generally get a pay rise like every 3 or 4 years or so. So yeah, it is. Every year you seem to like things cost more and more and your wages stay the same.
The Birchleys are just one of millions of middle-class families feeling the squeeze. And this is where the election battle between the two main parties is playing out. While the Conservative government is emphasising a return to economic growth and falling unemployment, the Labour opposition have hammered home what they call the cost of living crisis.
The Conservatives certainly have a very clear lead on overall levels of economic credibility, but at the same time we know that people are concerned about the cost of living and the extent to which the overall economic performance is or isn't filtering down to them in terms of their daily lives, which may be one of the reasons why it hasn't been having the effect that the Conservatives might have hoped.
Labour are hoping to entice voters with 25 hours of free childcare per week and a cut of 10% in energy prices. Their target is the so-called Aldi Mum, a term coined by Labour MP Caroline Flint that refers to the increasingly popular discount superstores.
They're having to, change the way they shop, change the way they buy things because of the economy. And I think, too often in politics, it's all about big economic strategies. It's all about language that, to be honest, most people don't talk about that in their daily lives.
Inequality may have risen sharply in recent years, but support for the political parties in the run-up to the May 7th election has been neck and neck. And for now at least, when it comes to middle-class middles, belts remain firmly tightened.
And now for a look at some other articles in Media Watch with Daniel Roth. Daniel.
How's it going?
You're here.
I am here,
as
always.
Yes,
as always.
As always. So what are we talking about here?
The Telegraph has this really interesting piece. The head of the world's largest bond fund, PIMCO, has basically come out and said, the EU is not good enough. We need a US EU. We need a United States of Europe. Basically, it's coming apart at the seams. We have movements in England to exit the whole deal. We have the whole Greece situation, which we talk about here, all the time. There's the EU, unless it becomes a real United States of Europe, won't survive the next few years, is basically what this guy's saying.
United we stand, divided we fall. But you know what? I mean, they have to essentially compromise their sovereignty, right, and their identity. But Greece will never be France, right, and Spain will never be Germany.
Right.
Well, is this even possible? I mean, like, why even consider it?
Well, there's questions that about Europe, like language questions, identity questions, that aren't such deep questions in the U.S. There are state identities in the U.S., but it's not the same thing. But at the end of the day, the success of the United States stands on the federal system to redistribute wealth, essentially. Rich states support poor states. They don't ask for interest on bills to be paid. This is something that is fundamentally different about the United States and Europe. And one of the reasons we see Europe always on the brink of falling apart is when you have a relationship like Germany's and Greece's, where they're negotiating as two separate entities, though under one EU flag, you don't have the kind of unity that a single currency demands moving forward, is what this guy, this is the point.
Yeah, in all fairness, obviously there's a lot of history that happened here with Europe, going back to the Second World War. I mean, Alexis Tsipras just took us back there over the past couple of weeks, demanding war reparations from Germany.
Indeed.
The Greeks, under Papandreou, since the 80s, essentially mismanaged their economy. Shouldn't they have to pay for that?
Well, That's the question. Did they mismanage it? Were they, a lot of what we're talking about now is rooted in 2010's bailouts. There's a lot of questions, a lot of investment. For example, if we want to take it back to World War II, we can talk about the Marshall Plan and how Germany was built back up after the war. At the end of the day, the reality of even capitalism is that people put support into the commons in order to have things like roads and electricity and these kinds of things. Right. And the same is true on national levels. If only these countries would recognize that and sort of work together to look forward. And that's what it takes. If they want to be separate entities competing in the marketplace, maybe they can keep going like this.
We'll see how to actually, if that's even, possible. But
if it's,
Daniel, thanks for joining us.
Thank you.
That is the end for us on The Economy Magazine. I'm Binyamin Tjong-Alvares. Thanks for watching us, and join us again tomorrow.